In 2021, it seemed unstoppable. Bitcoin was breaking records, Ethereum was rewriting what money could be, and everywhere you looked from Wall Street to social media, people were talking about digital gold. They said this was the future, the end of banks, the dawn of freedom. But within a single year, that dream turned to dust. Over $2 trillion vanished from the crypto market. Exchanges that claimed to be unshakable collapsed overnight. And once again, millions of ordinary investors were left holding nothing. For a while, it looked like the story of crypto had ended. Another bubble, another mania, another cautionary tale. But behind the chaos, something strange happened. Developers kept building. Governments started experimenting. And quietly, the world began to rediscover why this idea, digital money, refused to die. This is the story of the crypto comeback, and the question everyone's asking: can digital money rise again? To understand where it's going, you have to understand where it came from. The year was 2008. The global financial system was in free fall. Banks failed. Homes were lost. Governments printed billions to rescue their economies. And in the shadows of that chaos, a mysterious figure appeared, someone using the name Satoshi Nakamoto. They published a 9-page document that would change history. Bitcoin, a peer-to-peer electronic cash system. The vision was simple but radical. Money that didn't need banks. Transactions that couldn't be censored. A system built on mathematics, not trust. The first block of Bitcoin's blockchain carried a secret message. The Times, 03 Jan 2009, Chancellor on brink of second bailout for banks. It wasn't just data, it was a declaration. Bitcoin wasn't born from greed. It was born from frustration with corruption, with debt, with the fragile system that had just failed the world. For those early believers, it was more than code. It was rebellion. For years, almost nobody noticed. A handful of programmers mined Bitcoin on old laptops. Transactions were worth pennies, if anything at all. Then came the first real-world exchange. 2 pizzas bought for 10,000 Bitcoin. What seemed trivial back then would later become legendary. As Bitcoin's value rose, so did its myth. It was the money of the future, untouchable, borderless, unstoppable. Soon, others joined the movement. Ethereum introduced something new. Smart contracts programs that could run on the blockchain, automating deals, trades, and agreements without middlemen. Suddenly, crypto wasn't just a currency. It was an ecosystem. New coins flooded the market. Some were innovative. Most were nonsense. But speculation fueled growth, and growth fueled belief. By 2017, Bitcoin hit $20,000. By 2021, it hit $69,000. Crypto had gone from the fringe to the mainstream, a revolution backed by money, memes, and millions of dreamers. And just like every revolution before it, that's when it all began to crack. It started, as all crashes do, with a whisper. A few projects failed. A few investors warned of danger. But in the frenzy of profits, no one listened. Then, in 2022, the collapse began. First came Terra and Luna, a so-called stablecoin that was supposed to hold its value. Within days, it imploded, wiping out $60 billion. Next came Celsius, Voyager, and 3 Arrows. Capital major players that fell like dominoes, crushed by debt and delusion. But the real earthquake hit in November. FTX, one of the biggest exchanges on Earth, gone in a week. Billions of customer funds missing. Its founder, once praised as a prodigy, now facing criminal charges. Crypto wasn't just collapsing. It was burning. Bitcoin fell from 69,000 to under 16. People lost life savings. Companies went bankrupt. And the dream of financial freedom turned into a nightmare of greed and betrayal. The world laughed. The media declared crypto dead, but history wasn't done with it yet. After the crash came the silence. Markets froze. Confidence evaporated. And for the first time, people began to ask, was this whole thing just a lie? NFTs, once worth millions, became worthless. Influencers disappeared overnight. Even die-hard believers turned skeptics. Governments pounced. Regulators moved fast. Every exchange was suddenly forced to prove it wasn't another FTX. Crypto's biggest asset, trust, was gone. But if you look closely at financial history, this wasn't new. Every major revolution goes through the same pattern. Innovation, speculation, collapse, reinvention. Railroads, the internet.coms. Every one of them burned bright and crashed hard before changing the world. Crypto's fire had burned out. But its embers were still alive. When the headlines stopped, the builders stayed. Developers kept coding. Projects kept improving. The technology didn't die, it evolved. Ethereum moved to a cleaner, faster system. New blockchains like Solana, Avalanche, and Polygon focused on speed, scalability, and real-world use. Quietly, the industry began to mature. But here's the twist. The very institutions crypto rebelled against started embracing its technology. The European Central Bank, China, and even the US Federal Reserve began testing digital currencies of their own CBDCs, or central bank digital currencies. In a strange way, crypto's biggest enemy was now its biggest student. Meanwhile, in countries suffering from inflation and corruption like Argentina, Turkey, and Nigeria, crypto remained a lifeline. People used stablecoins not to speculate, but to survive. Crypto, stripped of its hype, was revealing its true purpose. A system for those who had no system. By 2024, something had changed. The noise was gone, the scams were gone. But the innovation remained. Regulations matured, banks began integrating blockchain. Big names PayPal, BlackRock, even Visa returned to the space, cautiously but clearly. For the first time, crypto wasn't fighting for legitimacy. It was earning it. Bitcoin ETFs got approved, opening doors for institutional investors. Blockchain use cases, expanded supply chains, identity systems, carbon tracking, digital art, and gaming economies. Crypto wasn't just speculation anymore. It was infrastructure. And as inflation hit fiat currencies hard, digital assets once again looked appealing not as gambling chips, but as protection. Bitcoin climbed slowly, quietly. But this time, without fireworks, without frenzy. Because this time it wasn't about hype. It was about resilience. Crypto's first generation chased profit. Its second is building permanence. If all of this sounds familiar, that's because it is. The dot-com bubble wiped out trillions but gave birth to Amazon and Google. The railroad bubble of the 1800s bankrupted investors but connected continents. The crypto bubble did the same, destroying illusions, but leaving behind technology that could reshape the world. Because innovation doesn't die with a crash, it's reborn through failure. What's left after the hype fades is what matters. Crypto's comeback won't look like the old boom. It won't be about coins skyrocketing. It'll be about blockchain, quietly running the world behind the scenes, powering payments, logistics, art, and contracts. Invisible, reliable, unstoppable. The real crypto revolution won't be loud. It'll just work. So what did we learn from all this? Lesson 1. Every revolution burns too hot before it cools down. The crash wasn't a failure, it was a correction. The fire that destroys also forges. Lesson 2. Trust is the currency of the future. Without it, technology means nothing. When crypto lost trust, it lost everything. Rebuilding it through transparency, security, and accountability is the path to revival. Lesson 3. Crypto isn't just about money. It's about control, the ability for ordinary people to move value, store wealth, and build systems outside of centralized power. That idea is too powerful to die. The next boom is coming. It might not look like the last one. It might not even be called crypto. But make no mistake, the technology is here to stay. And when the next wave arrives, the question won't be, how high will Bitcoin go? It will be, what have we learned? Because the future of money isn't about